We just got the PPI reading here today, and this is going to be the last inflation reading before we have CPI next week and the Fed meeting. And it caused the market to fall down. I want to tell you what came in and take a look at it. We're also going to take a look at some other big news. CZ going after Sam Bankman-Fried, Sam Bankman-Fried going after CZ, Coinbase going after USDT, and some news on Ethereum. So stay through to the end. I'm going to try to keep it nice and short for you, but there is a lot to cover. So again, just stay through to the end. There's a link to Trezor underneath the video. Also a link down there to Margex in case you want to long and short cryptocurrency. You can try that out underneath the video. Now, a lot of cryptos down 1, 2, 3% in the last couple minutes, and that is because of the PPI reading. You can actually see Bitcoin took this dive from almost breaking prior resistance, and actually we saw that almost an hour ago. We saw it go up to 17,350, but then fell down all the way down to about 17,070. So a lot of this, well, really the only reason for this is because of the PPI. So the PPI came in at 0.3%, or the core PPI, and the forecast was 0.2%. So this is the chart. You can see that it really started to ramp up at the beginning of last year. So you can see pretty large readings, 1.3% at the peak back in April of this year. We saw 1.6%, which is crazy, but you can start to see some of these large readings falling off. Like this last one was 1%, and that fell off, and now we have this one, this one up here, 0.3%. So this hasn't come on the chart yet, but last month was 0.2%. The month before that was 0.2%, and then we actually had negative readings earlier. So this is still not great. You can see the headline PPI is coming down. The core PPI is coming down, but a little bit slower than people expected, at least for the PPI, which is typically more of a leading indicator than something like CPI because it's the producer price index. So if people that are making these goods have to pay more, typically they pass that off to the consumer if possible. But you can still see it's peaked, and we're getting rid of a lot of the months that are pretty high, like I showed back here, right? The next one that we're going to get rid of, because again, they just fall off, is 0.4%. And then we have 1.2%. So we still will see inflation come down most likely, but we still want to see lower than expected CPI readings. Keep in mind, though, this is a 3.6% inflation rate over a year, which is still way lower than where we are now if we had this continuous 0.3% come in. So overall, obviously hurts the market. You can see the PPI slow down to 7.4%, but the core CPI or core PPI is at 6.2. I would not be surprised if we just stayed around this level. I don't imagine that this PPI report is really going to nuke cryptocurrency or the stock market either. I think it just caught investors a little bit off guard, probably some bots as well, just seeing that the report came in higher than expected, so they naturally sell. But I think overall, it's not too bad a report. I mean, of course, we would have liked to come in as expected, but also it's people setting these arbitrary numbers, right? What they expect to happen. They're not usually accurate. And we have the CPI coming out next week, which is, I think, a little bit more important for consumers and investors. Now, we do have some other economic news here today. We have the survey of consumers from University of Michigan. This is coming in at 10 a.m. Eastern time, so maybe an hour from when this video is posted or so. And that will also be good to take a look at, because if consumers think that there's going to be severe inflation, over the next year, typically that can be a self-fulfilling prophecy. More people want to buy stuff now so that they don't have to pay more later. So just be on the lookout for that. That might influence markets a bit. Now, CZ went on a bit of a rant talking about Kevin O'Leary and Sam Bankman-Fried, kind of out of nowhere. I mean, I know that he probably has some hard feelings still towards Sam Bankman-Fried, so it makes sense. But he also tries to give his opinion on a lot of things. CZ says it seems 15 million not only changed Kevin O'Leary's mind about crypto, it also made him align with a fraudster. Is he seriously defending Sam Bankman-Fried? And then he goes on talking about how they exited FTX about 1.5 years ago. On top of that, FTX spent a lot of money on Miami Stadium. multiple stadium, Super Bowl ads, baseball references, F1, etc., saying basically that they spent 100 to 1 what Binance spent, and they were still smaller. They say worse than losing 15 million. You'd think that being used as a poster child for one of the greatest financial crimes in history would make Kevin O'Leary think twice about taking Sam at his word again, but clearly not, based on his appearance on the Squawk Box, basically saying that you have to wait until he's found guilty because he has done nothing wrong at this point. That second part is my own interpretation of it, but he's basically saying you can't say that he's guilty. He says, unlike Kevin O'Leary, we continue to do due diligence even after we make an investment. As an early investor in FTX, we became increasingly uncomfortable and exited 1.5 years ago. Sam was becoming unhinged. When we decided to pull out as an investor, they launched a series of offensive tirades at multiple Binance team members, including threatening to go to extraordinary lengths to make us pay. They still have the text messages. Shortly after Sam began investing in friends in high places, from media to policymakers to celebrities, and he used that to manipulate public opinion, including attacking me and others in the industry. He talks about how his ethnicity was under attack by Kevin O'Leary signaled his intentions to continue those attacks in the media, saying also that Binance is a Chinese company, and CZ says he's Canadian anyways, and Binance isn't a Chinese company. You don't have to be a genius to know something didn't smell right at FTX because they were 1/10 the size, yet spent 100 to 1 on partnerships and marketing, also buying trips to the Bahamas, parties in the Bahamas. Oh, and by the way, we have secured multiple registrations, licenses globally, including France, Dubai, etc. Basically saying that if Kevin O'Leary is looking for someone to blame for the implosion of FTX, he should start by wagging his finger at his investment partner, Sam, and then perhaps at the man in the mirror. Now, Sam Bankman-Fried spoke back to this. He said, "You won, CZ. There's no need to lie now about the buyout. We initiated conversations around buying you out, and we decided to do it because it was important for our business. And while I was frustrated with your negotiation tactics, I chose still to do it. You threatened to walk away the last minute if we didn't kick in an extra $75 million. We did it anyways because we felt like this was the right move to make, because they didn't want Binance on their cap table. Among other things, as you know, you didn't even have the rights to pull out as an investor unless we chose to buy you out. Much of the tokens were still locked." Now, CZ actually talked back to this and said, yes, but you also didn't have the right to kick us out as an investor either. So it really was a mutual agreement. So I think CZ obviously airing out a little bit of laundry, giving his opinions on Kevin O'Leary as well. I do think Kevin O'Leary should probably come out and just stop defending Sam Bankman-Fried, or even if he's not defending him now, even if he's just saying, hey, we still have to go through with the lawsuit, right? Or we have to go through with the trial and everything like that. That makes sense on one hand because, in this country, it's innocent till proven guilty, but you might not want to say that, right? There's no reason to continuously say it when people ask you, because it's just making people upset. And it's pretty obvious Sam Bankman-Fried did a lot of things wrong and committed fraud. So I would just lay off that if I was him for sure. But hopefully this continues to pass as time goes on. Hopefully they can make some people whole, or at least pay back some of the crypto, because they obviously have some assets that they can liquidate. But let's move on to something maybe a little bit more positive. Ethereum developers target March 2023 for a release of staked Ether. They say that you may be able to get your Ether back from the 2.0 contract then. Now, this could be good or bad, I think, for Ethereum short term. The reason I say that is because there's a lot of Ethereum in this 2.0 contract. I forgot the exact number, but I believe it's somewhere around 10% of the supply. And there's been no selling pressure from this 10% of the supply. So this could obviously cause a lot of people to sell. A lot of people were still up significantly when they put Ethereum in there, and now they might be saying, hey, I want to take some profits. Maybe they think Bitcoin dominance is going to go up. Maybe they think that they just want to cash out because they had a 4 or 5x on their Ethereum, and sat through the entire bull market not being able to sell. There are a variety of reasons for why people might want to sell this, but this also pushes them to the next part of their journey where they don't have all this locked up. It has to happen at some point, and it's good, I suppose, that they're talking about just a few months from now. Now, after that, they'll still have to continue to scale up. I think that's going to be really important, but we do have layer 2s which help that as well, and hopefully they can kind of get that ready for the next bull market. We also have seen that the merge has been great for Ethereum. I don't have it pulled up here, but they basically have zero new Ether, or pretty much zero inflation, compared to what they would have had, which is about 4%, which is over $1 billion actually that would have been inflated into the supply, and an annual rate of 4%. But already over the last 3 months since they went live, it saved them over $1 billion worth of Ethereum. So that's great. It also changes the tokenomics, basically rewarding people for holding instead of making people sell to pay for energy to mine more Ether and to scale up, buy more Ethereum miners, and so on. So overall, I think Ethereum's in a good place. Now, Michael Saylor talked about Ethereum recently, saying it's definitely a security. When you have Ethereum that's locked in a contract that's controlled by a centralized entity and controlled by developers, saying when you can get that back or when you can't get that back, and the reason you put it in is not for fees or anything like that. You're putting it in for a return, right? You're getting a % return. That's why you put it into the Ethereum 2.0 contract. He says and makes the argument that that is definitely a security. So we'll have to be on the lookout for any kind of regulation on that in the future. It's so slow here in the US. It's been surprising how slow they are at moving the needle along and talking about what a security really is here. And then the last thing I want to talk about is USDC. Coinbase going after USDT basically by saying, hey, you can switch to the trusted and reputable digital dollar USDC. They're going to start today by waiving fees for global retail customers to convert USDT to USDC. Now, they obviously co-founded USDC back in 2018. Why would they do this? Well, they can make so much money from having the stablecoin. So if you keep, let's say, 10 to 20% of the money that you get for the stablecoin as a reserve, right? So let's make it even bigger than that. Let's say it's like 30%, right? Of a $42 billion market cap, they can then take $30 billion and they can go invest it in treasuries. So at 4%, $30 billion, that's $1.2 billion a year they can make pretty much passively from U.S. treasuries. So there's definitely a big business in stablecoins. And if they can get some of this market share from Tether, I think it would make sense. Now, some people are commenting on the fact that they still don't even support TRC20 USDT. I think that would also help them a lot if they supported that, because a lot of people just prefer to use that. It's cheaper to transact with as well than something like ERC20 USDT typically. So I would not be surprised to see some money continue to flow out of USDT and into USDC as time goes on. Let me know your thoughts on this underneath the video, and I'll see you in the next one. Bye.